We are today going to talk mainly about one human quality, if you can call it that, which can cause the maximum possible damage to us in life and in our finances. All of us suffer from it, and let me write that word right now. It is greed. Greed is the number one human pitfall, especially in investment, in finance, even in life. Most of the people who have gone bankrupt, who have ruined their lives, and unfortunately in the process also ruined the lives of their families, has been only because of one underlying factor: greed. So I'm going to keep this word here on this board, because as we go through today's presentation, repeatedly we are going to return to this one theme. And there are lessons to be learned. And one or two of those lessons, let me point out right at the beginning. Number one, all of us are greedy. I've said this repeatedly, I will say it again. Let me be the first to admit that I am greedy. I am prepared to swear an affidavit on stamp paper that I am greedy. All of us are greedy. No one is exempt from it. You can have a person who is the world's most selfless person, a social worker, religious do-gooder. Even they will be greedy. They are greedy to do good. Doing good costs money. Okay? They will be greedy in the sense of they will want a lot of donation. I'm not saying they will not do good, but the greed factor is there. There is that hunger that drives us. A normal hunger is fine, but when the hunger goes to the extent that it degenerates into greed, that is when we have prepared the foundation for our ruin, not for anything constructive. I am discussing these things in a very important context, a context of modern life, which is very fast-paced, where you have instant communications. You can press a button here and your message can be read by someone in New York if that person is awake at that time. Or if he is not awake, possibly his cell phone will awaken him. So these are worldwide instant communications. News spreads instantly. No one is verifying whether this news is correct or not. And in the process, what's happening is, unfortunately, we are losing our ability to think, to analyze, to evaluate critically. And as we lose this ability, we are becoming one of a vast multitude of morons who are there on the earth today. I was talking to yesterday a professor, highly qualified, who has been teaching in the leading business schools of India, the IIMs, the others. And he told me that recently he's given up, he's a little fed up. He liked teaching at one time. One of the reasons that he's giving up is he's seeing that the quality of the students as well as the quality of his peers who are teaching, and we are now talking about not your ordinary educational institutions, in the creme de la creme of management institutes, he's saying the quality is coming down, both of the students and of the teachers. And he says it's no longer that enjoyable to teach there. And one of the factors behind this is people are just losing the ability to think and to communicate effectively. Today we have bubbles that are being generated so often. In the old days, when we look at the history of bubbles in various either stocks or currencies or other commodities, these bubbles, if you go back 600, 700, 800 years, you'd be lucky if you had one really bad bubble which crashed badly in a century. But today, you find these things recurring virtually every 10 years. And we consider ourselves advanced and intelligent. Advanced maybe, but intelligent, I have my doubts. Very definitely not wise. The level of wisdom is definitely decreasing day by day. Today you have something like bitcoins. I have not invested in bitcoins. Whoever has asked me whether we can invest in bitcoins, I have said, I don't know, I'm not doing it, I'm not advising it. Because whichever economic definition you use to describe what's a bitcoin, I am unable to understand it. I am not going to get into something that I do not understand. I understand a diversified portfolio of stocks. Let us say there is an index fund that invests in the NSE 100 index. Please go to the website of the National Stock Exchange or the Bombay Stock Exchange, nseindia.com or bseindia.com. You have a facility by which you can download the index stocks. It will give you the names of the stocks from A to Z. It will give you which industry sectors they are. You don't have to study anything or work out financials or look at balance sheets. Read the names of those companies from A to Z. I was teaching yesterday in a different class where we did this exercise. The total time required for looking at the names of the companies from A to Z, 100 companies, was outer limit 3 minutes. 3 minutes. In those 3 minutes, after the 3 minutes, I just asked the class a simple question. Were most of these company names recognizable to you? And the answer was an overwhelming yes. Would you say that the impression you got when you went through these lists is that these are among India's leading companies? Once again, the answer was an overwhelming yes. Now, supposing I start an investment, let's say a systematic investment plan, into an index fund that is tracking the NSE 100 index. What am I doing? With my monthly amount, I am investing in the largest 100 companies, at least by market capitalization, in India. These are companies that are running businesses. And the fact that they are in this select group of 100, the overwhelming majority of those companies will be profitable. That means their activities are aimed at some kind of a profit. Who benefits from this profit? Or to use a better term, earnings. Who benefits from these earnings? It is the owners of the company. Who are the owners of the company? It's shareholders. Whether you are investing directly or through a mutual fund, you have an ownership stake in these companies that are running legitimate businesses, that are earning profits, that are paying dividends. Even if there's a surplus of profits, it goes back into their general reserves. It strengthens the balance sheets of the company, as a result of which you, as a shareholder, slowly and steadily grow your wealth. I see there a value. And the value that I see is that I am able to be part of a diversified portfolio of leading Indian businesses, taking a risk that is not equal to the total business risk, but taking a risk that is equal to only the amount that I have committed to that investment. That is what I am investing in when I make a simple SIP into either a diversified equity fund, or I buy a diversified portfolio of stocks, or I invest in a diversified index fund. In short, that I will classify as an investment. Now, I will write another word here called speculation. So if I look at the NSE 100 index as an investment, somebody puts 10 lakh rupees in this investment. On the same day, the person has come to me and the person discusses bitcoins with me. And whereas when the person discusses this, what I tell him about this investment is exactly what I told you in the last 2-3 minutes. And the person says, you know, I have 20 lakh rupees to invest, not 10 lakhs. I've also heard of bitcoins. You have convinced me on this point. Here is 10 lakhs for this investment. But with my other 10 lakhs, I'm considering investing in bitcoins. What is your opinion about bitcoins? And my opinion is very simple there. My opinion is 3 words. And the 3 words are, I don't know. I don't know about bitcoins. I do not know whether it's an investment, whether it's something else. It goes by the descriptor of cryptocurrency. So let's start with what it is. I always like to start with the basics. What is crypto and what is currency? A currency is something that is sanctioned by a certain power, by a certain authority. What you have in your hand, when you put your hand into your pocket and take out a 100 rupee note or a 500 rupee note, is a piece of paper. If there was a similar paper of similar quality, currency quality paper, with nothing printed on it, it would be worth close to 0. It is representative of somebody's sanction or authority. And the only way that something can be recognized as a currency is to have the sanction or authority of a sovereign power, the government of a country. It is quite possible that you have thoroughly mismanaged companies, like in Zimbabwe, where inflation at one time ran into millions of percentage points. Or today, I do not know how many of you are aware of the situation in Venezuela, where the inflation rate is now crossing 1,000, etc. A thoroughly mismanaged country. But even there, it is true that a currency can collapse. But so long as the currency is in force, the currency is backed by the sovereign government. And what happens if the currency totally collapses, like it did in Zimbabwe, where currency became meaningless? They replaced that with the only other currency in the world that has got near universal global acceptance, which is the US dollar. So the US dollar became the currency of Zimbabwe by default. That is what happened in Zimbabwe. Now, once again, you replaced a failed currency with a currency that is successful. And there it had the backing of the US Federal Reserve, that chairman's signature on the note. I'm afraid Bitcoin is not a currency. I've seen and heard and even read a number of opinions, especially from the tech geeks, that establish Bitcoin as a currency. I'm afraid I have not been convinced by that at all. Now, we come to the second part of it. Crypto, something that is hidden, concealed, something that has an implication of deceit, okay, of not being transparent. Whereas a currency is the most transparent thing in the world. Your same 100 rupee note would be recognized here, would be recognized in Indore in Madhya Pradesh, would be recognized in Kolkata, would be recognized by any Indian or a previous Indian anywhere in the world. It is open and transparent. So, this would be my first argument against it. The second argument is the kind of volatility and stress that somebody is going to get who is going to trade in Bitcoins. So I give all these kind of arguments to the investor, but the investor is not convinced, and the investor says, I'm going to put 10 lakhs here, sorry, I'm going to put 10 lakhs here, I'll invest through somebody who will provide me with this facility of investing in Bitcoins. And let us say that here I am talking of investing when the BSE Sensex is 36,000, and here I'm investing when the Bitcoin is something like 19,000. And now let us say this falls and this falls. Both fall by 60%. This falls to something like 7,000 plus, and this falls to something like maybe 16,000 or whatever it is, something like 60% down in a period of 1 year or 2 years. And now the same guy is coming back to me, and he said, listen, I had put 10 lakhs here and 10 lakhs here. Of course, you told me to invest in one of the indices, maybe the NSE or whatever it is, and here I invested in Bitcoins against your advice. But ultimately, whether it was your advice or somebody else's advice, my losses in both have been equal, which means my 20 lakhs have now become 8 lakhs. Both have fallen by 60%. Now, what is your advice? My advice to him will be, this is an investment. If the market has actually fallen 60%, you must have done something good in your previous life to get such an opportunity. Beg, borrow or steal, well, I won't say steal. Okay, beg maybe. Long story short, every last rupee that you have that is lying around, take it and dump it here before the index changes. He says, I'm willing to do it. I'm willing to do it. What about this? I said, you know that first advice I gave you when you came to me? I mentioned 3 words, I don't know. Now it has fallen 60% down. My advice remains the same, I don't know. Because I recognize this as an investment. I do not recognize this as an investment. When I do not recognize this as an investment, I cannot tell you whether to invest further or not. Here, very rarely would I use the phrase beg, borrow or steal, but keeping stealing out of it. Begging, borrowing, doing whatever you want, please invest here. Well, delete the borrow also, because not a very good idea to borrow and invest. Beg, yes, or more likely look at your various bank accounts, whatever you have, just dump it here. Just dump it here. So this is the difference between investment and speculation. The value in an investment need not have a relation to its price at a given time. Valuable investments can be very badly discounted at other times, can be super hyped up at other times. But there is a value in them that is intrinsic, which means the lower the price, the more valuable it becomes to the investor. Which means the lower the price, the better the value proposition. Which means the lower the price, the more boldly you can go into it. And when the market in the modern era is down 50 or 60%, there is virtually no risk here. There is virtually no risk here. Even if Bitcoin comes down to $1, from $19,000 it has come to $1. $1 can I buy? My advice will be the same. I don't know, because you can lose even that dollar. It is difficult to conceive of a loss in this kind of an investment situation. Therefore, this is as good a starting point as possible for today's session. I have seen a number of people, reports are coming to me now, including people who have telephoned me and asked me about Bitcoins, and having taken my advice, have still gone and bought Bitcoins. And now I'm discovering that the vast majority of these people who did it bought Bitcoins at 18,000 and 19,000 per Bitcoin. And now the rate is maybe some 8,000 or whatever, I don't follow it, but whatever, I know that it is substantially down. Almost this situation has happened. If you want to know the foolishness of this kind of so-called investing, I won't call it investing because it is speculating. If you want to know the foolishness of this kind of speculating, all the telephone calls I got asking me whether Bitcoin was worth investing in were when Bitcoin was more than $18,000. Now it is $7,000. Nobody is calling me and asking whether Bitcoin is a good investment. My simple question is, if Bitcoin were an investment, let's stretch our imagination for a minute. If Bitcoin were an investment, would it be better at this rate to invest or at this rate to invest? Even a lower KG student will say immediately, you don't have to think. How come nobody is calling me now? How come nobody is calling me now? Why were all the calls here? The answer is very simple. At 19,000, I am aware that there were a number of internet articles, other articles, etc. saying that Bitcoin is going to 100,000. I don't know whether you are aware of this. There are plenty of them. We come back here to our main theme for today. When I'm greedy, what am I looking at? I'm looking at 19,000 and I'm looking at 100,000. Let's say if you write 100,000 here and 19 going to 100, and I'm going to make 5 times. If I invest 10 lakhs, I'm going to make 50 lakhs in a very short period of time. While I remain blind to the fact that from here going to 100,000 is uncertainty, and there is equal uncertainty about whether it will come to this level or somewhere in between or lower than this. But this part of it I'm blind to. What causes my blindness? Greed. So I want to start today's session by telling you that greed leads to blindness. Greed leads to the massacre of common sense, the murder of wisdom. And since all of us are greedy, we better start by recognizing this, and in our life, we better take some steps to control our greed. I will stick my neck out. I don't make these predictions, but I'll stick my neck out and say that I don't think there is a single human being who can eliminate greed. I myself recognize that I was greedy maybe 30-35 years back or more. I still recognize that I'm greedy now. That means in 35 years I have not improved. But the question is not whether I can eliminate my greed. I should also know my limitations. What are my limitations? That I cannot eliminate my greed. What can I do? Maybe I can control it. Maybe I can bring it within an acceptable level of control. Not by falling for some get-rich-quick schemes. Thereby, I can look for something like this, which does not pander to my greed, but will give me a decent value in the long run. Let's move ahead. We are back to Burton Malkiel's presentations, and very early in his book, he tells the stories in a very engaging fashion of some of the major bubbles that history has seen. And he starts with the tulip bulb craze. But before that, we ask ourselves a question: why concern ourselves with stock market price bubbles? Because Larry Swedroe, a US investment advisor and a good author, he says there is nothing new in the markets, only the history you haven't read. History can teach us a lot. History can point out what has happened to people who are greedy. History can help us learn from other people's experience instead of trying to learn on our own, because this is important. Experience is the toughest kind of teacher. It gives you the test first and the lesson afterwards. It's the reverse of normal education. Normal education, you get nicely prepared. There'll even be a preparatory exam in many cases, and then you have your final exam. But experience is not that. First the test, then the lesson. That's why we have that famous say, we learned from experience. So the people who have common sense, the wise people, the prudent people, will not take this risk. what they will do is they will learn from other people's experience. And there is a rich experience in the stock markets, in even the financial markets, not just the stock markets, for us to learn. So we are going to look at some of the spectacular price bubbles that we have had through history, starting with the craze in Holland for tulip bulbs, the Netherlands for tulip bulbs, then mainly in England, the South Sea bubble, we'll come to that later. Then the worst depression the world has ever seen, 1929, the Great Depression. Then of course this absolutely mad bubble we had between 1998 and 2000, the software bubble, and the global financial crisis from 2007 onwards. So these are the 4 or 5 things that we are just going to look at.